This week, we have a very special guest with us, crypto maximalist and co-founder of Scalar Capital, Jordan Clifford. So welcome to the show, Jordan.
Hi, great to be here. Thanks for having me.
So can you start by briefly walking us through your experience?
Yeah, sure. So I got into Bitcoin in 2013. I had heard about it in 2011, but was really skeptical for a couple years until Cyprus happened in Europe, and the government started seizing their citizens' bank accounts, and that made a lot of headlines and also sent Bitcoin soaring. So I just couldn't ignore it any longer, and I've been really a big fan of it ever since. That ended up leading me to Coinbase, where I became a software engineer. This was early 2016. And at Coinbase, I did a lot of work on their backend systems, basically all the compliance and legal and fraud detection systems, pretty much everything that runs the company under the hood. I was in there refactoring it and improving the code base. So in doing that, I was working closely with Linda Shea, who's my co-founder at Scalar, and she was a product manager.
That's awesome. Well, Jordan, there's so many things I would love to ask you about, but since our time is limited, I want to maximize the value of your time by diving deep into one theme that Scalar Capital cares a lot about, which is privacy. So first, to set the context for listeners who might think that Bitcoin is fully anonymous, can you explain in what ways it is not?
Yeah, so it's a common misconception that Bitcoin is anonymous, and what Bitcoin actually is pseudonymous, and in fact, the Bitcoin is defined as a history of that Bitcoin's location. So every Bitcoin tells you where it's been before, and it's anything but anonymous. The transaction graph is very well understood. The only thing that's protecting you is that you're not typically going out and telling everybody which addresses you control. If you were to get linked to an address, it's actually very easy for really anyone to kind of learn a lot about you, how much Bitcoin you have, how much you've earned, how much you've spent, perhaps who your counterparties have been. Many details can be discerned.
Mm-hmm. And so this is an important question, but I'm sure that you've heard this question so many times, you're probably tired of it. So why does privacy matter if you're not a criminal and if you're not living in like a repressive regime?
Yeah, privacy, it matters for a lot of reasons. I think the most important to me is that it's a fundamental human right to have financial privacy. I think that really we have freedom to self-express in the privacy of our domain. And when wealthy people interact with other people, they don't want to be giving up details about themselves. And when businesses interact, they don't want to necessarily be revealing anything about their businesses that might put them at a strategic disadvantage. But also, I think it's important to note that privacy and fungibility are really interlinked. If there's history to a coin, that actually can really reduce its fungibility. And just in case people aren't aware, fungibility is the idea that any unit can be interchanged with any other unit of the currency, and they're all homogeneous. If I have a $5 bill and you have a $5 bill, we can swap them, and nobody minds or even notices necessarily. So when you don't have privacy, you actually have lots of details about the history of a coin, and that can lead to whitelists or blacklists, and that can actually really start to limit the ability for that currency to be used as currency. When you have to worry about when you use the currency, am I going to get looked at funny or be asked about where this money's been in the past? That has chilling effects across the entire system.
Mm-hmm. So you're referring to an idea that you wrote in a Medium article about how some Bitcoin might be used for illegal purposes, and then it got passed to some law-abiding citizens, but then those citizens get flagged because they use some of those Bitcoin that has been identified to have been used for illicit purposes in the past.
Yeah, exactly. I did write a post about that on Medium that I encourage people to check out if they're curious about this idea. But privacy fundamentally is really about making sure that people are comfortable using the system. If you're using the system and you're leaking all kinds of sensitive information about your income, your spending patterns, who you've done business with, that's a scary situation to be. And it's not just the governments that you want to protect from getting that information. There's plenty of attackers, Russian hackers that aren't from Russia. There's plenty of people that are trying to profile possible victims out there, and it's really incumbent upon all of us to make sure that we're safeguarding our personal financial data.
For sure. So now diving a little deeper into specific privacy coins, obviously there are a lot of these different privacy coins and they all have different features. And at least for myself, when I first started looking into privacy coins, the kind of fallacy, the assumption that I had was the more technologically complex the code is, the better it is at obfuscating transactions. But obviously that is not true, because we saw with the case of Verge, the privacy coin that got hacked, because it uses 5 mining algorithms instead of 1. So that is a terrible heuristic to gauge coins on. So my question for you is, how do you evaluate how good a privacy coin is? As an investor, what are the heuristics you use to evaluate different features and trade-offs?
Yeah, it's a great point, and it's really a lot of it is an art at this point. So when you're looking at a protocol, what you want to understand, or there's some rather deep technical ideas like the anonymity set, and all the metadata that you're leaking about yourself, and who might be an adversary, and kind of learning about that metadata. There's all kinds of different attack scenarios that you have to worry about, whether it's a known adversary who you actually know the location of, or whether it's a global adversary who actually is able to sniff all the internet traffic in the world. But at the core of it, what you want to make sure is that when you do a transaction, that somebody else seeing that transaction doesn't know who you are, doesn't know how much the transaction is for, and doesn't know who's receiving that transaction. If they're able to link together the transaction with past transactions of yours, or past transactions on the recipient's end, or even the amounts, and amounts are very important in terms of being able to track the amounts into and out of a system. A lot of tumblers can be totally bamboozled if you use a really odd amount. Like, let's say you sent 27.325 Bitcoin into a tumbler, and then there's that exact amount coming out the tumbler in a couple of hours. You really not done yourself much service in terms of gaining privacy. So there's a lot that goes into it, but at the core, I like to see basically a large anonymity set. So what really helps with that is privacy by default, and even better than that is mandatory privacy. So something like a Monero that actually has a mandatory mix-in of 4, and I think it might even be going up at this point. Monero is really strong about making sure that they're guiding people into better privacy. And that's really important, because many users aren't technical and they don't necessarily think about the protocol details of how they're interacting with the protocol. So having a project that really encourages better privacy parameters is a really good thing. And you also want to see simple constructs. Complexity is the enemy of security. Complexity is the enemy of systems that need to be continuously working. And blockchains, they're financial software. We can't have bugs here. So the more complex is not necessarily better. What is better is sound fundamentals. So you really want to learn about it as much as you can. Learn about it from what other people are writing about, and how they're analyzing the privacy properties of the different protocols. And then just kind of make your judgments there.
Mm-hmm. And going back to your point about default privacy for some coins, of course, a coin like Monero using ring signatures has default privacy. But for coins like Zcash, for instance, where users can opt in for privacy, isn't that a vulnerability? Because I think Laura Shin brought this up in her Unchained podcast with Zcash founder Zuko, that if only a portion of the users of that coin opt in for privacy, and if you look at the network, can't you just deduce which one of these people are not using shielded transactions and figure out who they are? So I guess the kind of higher level question for that is, does a coin have to be private by default in order for privacy to be upheld in any way?
So that's a rather extreme statement, that it has to be privacy by default to have any privacy preserving properties. I'd say the privacy by default definitely helps. So for something like a Zcash, if you're not going to use shielded addresses, you're really almost using a Bitcoin clone. You may as well just use Bitcoin. And then when you do that, you're actually doing yourself no favor, but you're also doing the other people in the Zcash ecosystem no favor, because they're not actually able to include you in their anonymity set. So to get a bit into the weeds here, the anonymity set is the set of all users that could have done something. So when I see a transaction, I want to know who did it. Well, if it's a Monero transaction, that's the set of pretty much all Monero users. If it's a Zcash transaction and I'm going through the shielded address, well, that's the set of all the users who are using the shielded address. It's not the set of people who are using transparent addresses, because you know it couldn't have been them. So you've reduced their anonymity set, which is kind of like, you could think about a large, crowd like Times Square, and you want a big anonymity set with lots of people doing lots of things. that you can kind of get lost in, cryptographically lost in, and that way you gain privacy by being one of many people that could have done something. So, you've really not helped those people with their enemy set, and furthermore, you've kind of cast a little bit of a shadow on them, saying, well, they're using privacy, they must have done something wrong. When that's not really the right mindset, in my opinion. Just because you have nothing to hide doesn't mean you want to share every detail with the entire world. I think you still want to have some decency. We still have blinds on our windows. We still have locks on our doors. Having privacy is not, it's not necessarily only for crooks. It's for everybody.
For sure. And on that relevant point, I think you tweeted out before that cryptocurrencies designed with privacy from day zero would be much better at delivering privacy than currencies that didn't start with privacy in their DNA from the very first days. So can you talk about this from a more technical perspective? Why is it harder for currencies to implement privacy later?
Yeah, so I think part of the reasons aren't technical, actually. They're cultural. So, privacy is expensive. It does come with some complexity. Complexity is absolutely the enemy of security. But you do need a little bit more complex cryptography in order to obtain privacy. So that complexity comes with a cost. And that cost is often larger size of transactions. Perhaps they take longer to sync. So, there's going to be some cultural resistance to that kind of thing, bloating their system and slowing it down in a system that doesn't actually care about that at a cultural level from the beginning. So that's kind of a cultural problem that really leads into technical choices. But also, just from a straight technical point of view, a system that is built with privacy from the ground up is going to be much more careful about what information it leaks to the world about its transactions. It's probably going to have encrypted amounts. It's going to have ways to conceal the sender and the recipient. And if you don't have that from the beginning, it's often really hard to patch it on, and especially in a way that kind of again, maximizes that anonymity set across the whole system. Because whenever you're doing a backwards compatible upgrade, you're almost always going to need to keep compatibility with the old way of doing things, which is going to, preclude some people, some part of the population from using that better privacy and preclude the entire system from getting better privacy.
Mm-hmm. And shifting gears to some recent news about privacy coins. Recently, we've heard the news that Monero, which is one of the more popular privacy coins, is launching a layer 2 solution called Tari, which allows the creation of tokens on top of the Monero chain. And we see some big name VCs funding this project as well. So my question to you is, what are some use cases for private tokens that are not used for currency purposes?
Yeah, absolutely. So I think Tari, is one of its aims is to become a ticketing platform. And if you having a ticket or a local event, and you rented out a venue, and you've brought in a caterer, and you brought in some talent to a musician or a band or a DJ, and you want to issue tickets. You don't necessarily want the guest list to be public. You don't necessarily want the prices of each ticket to be public if you're charging some people more than others. This kind of a system, you can imagine that it'd be nice to have that privacy around it, and maybe you even get a little bit of exclusivity, an aura of that within it. I think there's really many uses where you could have something that's non-currency, and you still don't necessarily want to broadcast to the whole world what's happening here. I think there's just a lot of human interaction just doesn't necessarily want that scrutiny of the public, kind of witnessing it.
Mm-hmm, for sure. And moving on to another piece of news as well. Recently, there's a really popular license exchange called Gemini that started allowing fiat to Zcash trading. And I was actually really surprised because I thought that it would be in the regulator's best interests to not embrace privacy coins. But here we see a completely licensed exchange kind of just welcoming Zcash with open arms. So my question to you is, do you see this as an indication that there is a change in sentiment regarding these privacy coins, and who are the users behind these coins?
I don't know if there's a change in sentiment, but I know that when you're on a Gemini or a Coinbase, they go through extra measures to kind of understand what you're doing and how you're using the platform. And the fact that you're using Zcash doesn't preclude them from asking what you're doing and really trying to understand your activity on their platform. And if that activity arouses suspicion, then you may be asked to leave. And the fact that the network is private, I don't think changes that dynamic very much. And I think the regulators and exchanges do recognize that there's ways to get better privacy even within Bitcoin and Ethereum, and they're going to have to deal with that in ways that aren't going to necessarily allow them to pierce the veil of the peer-to-peer networks that are kind of allowing this activity. So we're going to have to rely on good old-fashioned detective work and compliance, by just generally asking the customer what's up and trying to figure out what they're up to.
Mm-hmm. And the next question I think a lot of investors will be very interested in. So you wrote that privacy exists on a smooth continuum rather than in a binaristic way. So how would you rate some of the more popular privacy coins in terms of the privacy they offer?
Yeah, I think Monero and Zcash are neck and neck. I'm a little bit biased towards Monero because they've got a long track record of actually upgrading the privacy. The privacy is built on cryptographic primitives that have been around for a long time, and these systems, it takes them time to bake and to really the cryptography is really a cat and mouse game, and you don't actually know it works until it's been in the field for probably a decade. So even Monero is I would say, still untested and experimental software, and Zcash is even more so. And then the mandatory privacy that Monero offers, I think, is something that does set it apart from the pack. But again, Zcash, the zero knowledge proofs, and the ZK snarks that are involved in there are very clever, and you actually get theoretical perfect privacy. I think that's again theoretical because not everybody is using them. So I definitely advocate for both, and I think they're the clear head and front leaders in the pack. There's a few others that are, I would say, still kind of finding their footing. That I don't really want to get into too many specifics currencies, but
for sure. So pulling this to a more consumer-focused level, so this is more of a nuanced question. I find it really interesting that while so many people claim they care a lot about privacy, it almost seems like lip service at some instances. And actually, Laura Shin, which I just mentioned just now, brought up in her podcast that only 14% of the Zcash transactions are shielded, which could obviously be a function of that the majority of the transactions are happening in like open exchanges for speculative purposes. But if you actually look at the way that consumers continue to sign away the privacy on like social media, on apps, it seems like convenience is still very much a priority over privacy for the general consumer. So do you think enough people will care about privacy enough to start using these private private cryptocurrencies en masse? And if, in other words, do you see privacy coins having the same upside potential as other more generic crypto assets, or will it always be relegated to a very small niche in the market?
I think it's going to turn, the tide will turn, but I think it's going to take a long time. I think that, the general public is still very much, kind of, I guess, willfully ignorant about what having privacy means and what the implications and ramifications are of not having privacy. I think that, just look at the Mark Zuckerberg congressional testimony to kind of see where the general public is at with their understanding of this debate. So I think it'll take some time, and it'll start definitely in niches that care more about privacy than others. But I do think that we'll get more and more of that mainstream aware and caring about it. But one of the things that I'm really hopeful for is ways to give people privacy that they may not have otherwise asked for or needed by giving them an economic incentive to do so. So one mechanism that is going to bring this about in a way is the Schnorr signature aggregation on Bitcoin. So this is a cryptographic technique where you can actually have one signature authenticate many different inputs or spends, and you can actually give people a cheaper transaction rate while giving them better privacy by encouraging them to use this, where they can now join their transaction with other people also making a transaction in very much like a join market kind of way, and coin join, I should say, and then use the Schnorr signature to sign for the entire transaction, and that actually is giving people a better price and better privacy. So I'm hopeful for that, but I am hopeful that more people will kind of recognize what they're giving up when they don't use privacy.
Mm-hmm. And that's actually a good note for us to shift gears to focus on the last two questions, which have to do with you. So I'm curious, what are some resources, books, articles, and interviews that you've consumed before that blew your mind the most about crypto?
Andreas Antonopoulos is just so prolific. I can't point to one of his speeches, but I definitely get fired up every time I listen to him talk about how, Bitcoin is the internet of money, and it's really not just money. It's programmable economic interaction, and really you can do almost anything that you could do in the old world on the blockchain, and you can do it in a better way where everybody can validate it for themselves and nobody has to trust other parties. So I think that any of his material is a really great place to kind of get fired up about the potential of this technology.
And the last question I have for you is, a lot of my guests have really interesting habits or interesting facts about them that not many know about. So Chris Berniski from Placeholder Ventures, for instance, told me that he's into glass blowing. So I'm interested as to, there are some interesting things about you that people who follow you on Twitter or watch your interviews or read your articles might not know about you.
Well, I've been to Mongolia 3 times. I have a Mongolian wife, and I'm, casually trying to learn the language. I think it's, such an amazingly beautiful culture. It's very diametrically opposed to what we have here in Western culture, where they have a very simple life. They have what they call a ger, or we might call a yurt, and they have their cattle and their livestock, and they live a nomadic existence, and I've never seen a happier population. They're always so warm and welcoming, and I think that's quite amazing.
And back to our listeners, thank you very much for listening to another episode of The Block Crunch. If you haven't already, please follow me on Twitter at Mr. Jason Choi. That's MrJasonChoi, because I share the latest episodes and updates there. If you haven't, please also rate and subscribe on whatever platform you're listening to this on, because it does help us get this out to more people and help spread the crypto virus. Once again, I've been your host, Jason Choi, and I look forward to seeing you at our next episode.